Hello and welcome. One of the big questions being asked at this moment is whether the Great India Startup Party is over. Is there a comma? Is there a full stop? Is there a pause? And is there a definite course correction? I have some data I want to start this show with. About 5,000 employees have been sacked by different startups taken together just this year. The funding seems to be drying up to some extent at least. Just $3.6 billion of funding in the second quarter of this year versus $8 billion in the first quarter and $10 billion in the last quarter of last year. Various international funds saying that they seem to be going slow, at least not as aggressive as they were in the past. Some tech IPOs being deferred, some marquee names in the startup industry now finding it difficult to raise the next round of funding, especially at elevated valuations, and just one unicorn in April versus the strike rate of one in every 4 days. So, is this party coming to an end? Joining us now at the India Today studios at the World Economic Forum, some of the most marquee names of India's startup industry. I want to welcome first and foremost Ritesh Agarwal of OYO. He's been cheering in Davos saying apna time aa gaya, so he'll tell us why. Nikhil Kamath joins us from Zerodha. They're facing some headwinds now with turbulence in the stock market, but generally they've had a very positive trajectory. One person whose business everyone wonders ye karta kya hai, Vidit Aatrey of social commerce company Meesho. For a perspective of how the government views what's happening, we've got Deepak Bagla just back from Japan. He was with the Prime Minister as part of the delegation sent by India. And last but not least, to my immediate left, we've got the man who set up CoinSwitch. And we'll get a sense of what's happening in the crypto universe. So welcome, Ashish. Let me start by asking, and this is not just about your individual companies, but also about what's happening in the startup space in general. So Ritesh, while you're saying apna time aa gaya, explain why, and what do you have to say about the headwinds that we're now seeing in the startup ecosystem, with it seeming that this one big unbelievable party could be coming to an end?
First off, thank you so much, Rahul, for having me here. Great to be in the company of all my young colleagues from the industry, including Mr. Bagla. We consider him on our side.
Like I am the veteran line, huh? He's like, yeah, young hai, main veteran hu of startup ka.
But thank you for having me here. Look, I think I started by telling you apna time aa gaya because last time we were together, we talked about how travel was shut. And now the Indian travel is coming back with vengeance. Whether you are in the hills, in the beaches, in urban towns, people are traveling significantly more. Last month in the Easter weekend, just in 1 week we did over 8 lakh bookings, and every week after that we've done more, which is every week beats the record ever since pandemic. So that was the reason I was telling that about travel. I think that said, generally, if you look at the broader startup ecosystem, I would like to call out 3 things, right? The first bit is no one can take away that the last 3 years have been transformational for the Indian startup ecosystem. And, everything that grows so quickly needs to consolidate for a little time before it starts growing all over again. And that's what I feel is what's happening here. There have been some, restructuring in some of the other startups in the country. And I think my perspective is there are at the same time a lot of startups which are also hiring. So my hope and aspiration is that all the talent will get, accepted very quickly. And last but not the least is the same way as you think about inflation. Inflation is happening around the world, but India is in a relatively much more sweeter spot than most parts of the world. That's the same thing I tell about the startup ecosystem, that you're seeing startup ecosystem challenges around the world, but India is in a much sweeter spot. And my perspective is, I went through 2 years of challenge in the times of COVID, and it was a definitive character building phase. It allowed me to make sure our company was significantly more product and engineering focused. We improved our margins, our cost structures. I think, the next 8-9 months will be character building for business, corporate governance, and so on for startups.
Earlier, other people's parties ending now, and you're hoping that a new party is starting for you.
For everyone together in a little while from now is my hope.
Nikhil, the narrative suddenly seems to have turned. That headline that every 4 days we are throwing up a unicorn was phenomenal. 1 in every 10 unicorns globally was coming from India. Now it suddenly seems that there's a bit of an air bubble. How are you viewing this?
So Rahul, for the lack of a better word, the private markets for a while now have been more expensive than public markets. When retail investors and the public at large experienced a bunch of IPOs which kind of failed, I think people are re-questioning why startups are valued at the level that they are. Cost of money, I think, is going up significantly. The only tool the central banks across the world have to fight inflation is to take interest rates above inflation. And when that were to happen, especially in the West, the amount of money percolating down into India to invest into startups will probably go down. So put cost of capital as maybe twice as much as we had in the past in 1 year from now. I think the valuations they can attribute with that money to startups in India will go down proportionally. And I think we are seeing the first semblance of that in a way. And in my experience, if you go back in time and look at history, cycles where inflation starts going up do not end overnight. I think it will be a long drawn cycle, and hopefully, India does better than the rest of the world in that cycle.
I remember watching your interview with Udayan, and you were circumspect even then, saying that some of what we are seeing, the valuations that are being raised, the fact that there is no clear path to profitability, that this party wasn't making sense to you from the very beginning.
Yeah, at some level, I think you have to be a skeptic of exceedingly costly valuations with no real path to profit. At the end of the day, as a shareholder or an investor in a company, you're putting money into the company to get a return, right? At some point. There were companies which did not know when that point would be, and there were companies which were not even forecasting when that point might be. So it did look like a bubble. Not much has changed today, but everything is cheaper. I don't think it would be fair for me to say that there is no value here. I think there is plenty of value. We have incredible entrepreneurs, a great opportunity, which is India, with our demographics and the growth story. But the question really is, at what price and at what cost do you enter and you get that value?
The markets have seen a lot of turbulence over the past few weeks. How has your business been impacted? Because people suddenly who are very enthusiastic about trading would suddenly be wary about the money that they're losing. A lot of these people jumped onto the retail trading bandwagon late and have probably not seen this kind of turbulence.
Yeah, I would say we are closely coupled with equity markets. When markets go up, we do well, and when markets go down, we don't do well. So our revenue would be down relative to the previous quarters in this quarter. Maybe 15-20% we'll know at the end of the quarter. The problem with retail, Rahul, is when they're making money, they're constantly doing stuff. They're reallocating, they're diversifying. When they do not make money or they lose a certain amount of money, typical psychology would mean they shut down the computer and do not look at their applications again till they watch on the news that the markets have rallied and something great has happened.
Which isn't necessarily the smartest thing to do, but that just explains some new investor psychology as well. Vidit Aatrey, there have been lots of reports in the media recently about Meesho not struggling, I'm just trying to frame this correctly, to raise the next round, the kind of level of valuation that you'd achieved previously. So explain the kind of troubles that you've been dealing with, how you're dealing with those, and your sense on the larger question about whether the startup party is coming to an end.
Sure. I think first of all, I'll start with the point around what is Meesho. As you said, a lot of people don't know.
A lot of the Indian industrialists, like the old timers who've been coming here, they look at what you do and say, okay, but this doesn't make sense, and ye karta kya hai? So I heard at least 2 or 3 people ask the same.
Correct. So that's why I want to take a minute and kind of talk about it. So we are an e-commerce platform focused on bringing the small business Indian economy online, right? And why is that important? Because 85% of overall retail in India is unorganized, unstructured, and driven via small businesses. Whereas everything that we saw in e-commerce before us was focused on brands, on organized commerce, right? So this had to come up like at some point in time. We are building that e-commerce platform for Bharat, like for the next billion consumers, and on the other side, really enabling the smallest of businesses in India to come online and become successful, right? Over the last 12 months, we have had more than 100 million people in India transact with us. Number of people who are on the platform is even more. And on the other side, we have close to 1 million small businesses who are selling their products across the platform. So it's quite significant in that sense. And we really believe that this is the thing that India needs if we really want to kind of maintain the growth rates we want over the next decade. Like small businesses have to participate in that growth story. Now coming to some of the reports that you talked about. As a business, if you look at in 2021, we raised more, like close to $1 billion in just 2021, right? We have already raised a lot of money that we don't need for maybe a few years. If we don't raise money, it's okay, right? At this point in time, we have a very, very strong balance sheet. And what we are focused now, because of everything that has changed in the market, the expectations from investors, unlike 2021 was purely about growth, right? Because public markets were also rewarding growth. Private markets were also rewarding growth. So the only thing that matters was that. And now I think that has changed. Like now our focus is how do we start to grow much more profitably. Like we have taken like profitability goals not very far away in the next 12 months, and we are very, very confident that we'll get there. I think it's just that
more pressure now to deliver profits than in the past. Are you seeing the gauge of determining the viability turning from just projections on an Excel sheet to actual path to revenue and when that starts coming in?
So I don't think, let me say this, the objective has changed. Like things that you were projecting earlier was a lot more around, hey, what is the kind of top line you want? Now the goal is top line and bottom line. I think that's the only thing that has changed. So the objective has changed, but I don't think there's anything fundamentally changing apart from that. Like
Which is a big change.
Yeah,
it's
so
not just a small change, it's a whole different lens.
As Ritesh was saying, like you have to grow, you have a phase of growth and then you have a phase of fix. Then you have a phase of growth, then you have a phase of fix. You have to do it. Because if you do it too late, then the cut that you have to do to go back is much harder. Like if you ask me, it's a good thing to happen. Like the entire ecosystem will become a lot more disciplined, will focus on the right things. Like you can't have a phase of 5 years when you just focus on growth and then ask that person to make profits tomorrow. You can't do it. So if you ask me, it's a very, very good thing for the ecosystem. And you're right, like I know a lot of my friends, like everyone in the ecosystem, I think we have had to make some hard choices. It's not easy for anyone, but these are the right things to do and people are making it happen. It's tough now, but I think 6 months down the line, all of us will realize that it was a great thing for the ecosystem.
So because the music, Deepak, in your view, just been paused as Vidit hopes for 6 months? Or do you think that potentially this artificial party could be over?
So let me first start. You mentioned about Tokyo. Let me give you an example and you're talking about valuations. The market capitalization of Suzuki Motor Company on Tokyo Stock Exchange is $14.8 billion. The market capitalization this morning of Maruti Suzuki on the Mumbai Stock Exchange is $26.8 billion. That, Rahul, is the magic of India. Now let me move beyond valuation. Startup is not just a story of valuations and unicorns. Actually, startup is a story of solutions, innovation and disruption. This story has just begun. You've heard the 4 stars which we have here. They just represent the beginning of a new story. And let me start and tell you why I say that. Of my 764 districts in India, today over 700 of them have a registered startup with us. The story of India is now beginning. The story of India is moving beyond those 10 or 12 metro centers and centric ones where this has happened, and it's moving down to those villages where the real disruption is coming up, because the disruptions coming from there are disruptions for solutions which are coming there, are the ones which would cater to 6.5 billion of the world's population and not just the top 500 million. That is where this story has just begun. And the other element to that is that the new India which is emerging out of this, and by the way, when we are in Davos, everybody agreed today, India has arrived. That, I think, is a common sentiment, not just by us, but by everybody across, and not just in Davos, but they said on the world stage. So the new story of India which is coming up is now bottom-up, is not any longer top-down, Rahul. And when you have this bottom-up, which is diverse, because one of the other elements of the success of Indian startup story is it's a reflection of the Indian economic story and the social story, where the acceptance of startups has come. But look at our economic story. Even in the midst of the most unprecedented lockdown in human history, we have retained our position of being the fastest growing large economy on the planet. We were just discussing, we are 9,200 days away from our 100th birthday. At this rate, I will add $25 trillion by 15th August 2047.
We couldn't even hit 5 trillion in 2022, which was promised, partly because of the pandemic. But the fact is that we're running at a far slower run rate than your government had hoped for.
But Rahul, let me just point out the other thing. IMF had said that we will do a 5 trillion in 28, 29. They've revised it to make it earlier to 26, 27. Times, when you're looking at a span of time in the history of a nation, there'll always be 12 to 24 months here and there. So sometimes you go faster, and sometimes you might go a little later.
The party is just beginning.
Only just begun.
The one place where the party is definitely very turbulent right now is in the crypto ocean, where we're seeing with some stable coins like Luna, the bottom just fall off. It's like the Titanic hitting an iceberg, and then it's just going down really fast. And we've seen all other cryptocurrencies also, including Bitcoins, taking a big hit. So is your party over?
Absolutely not. And I think what is happening is it is happening across, be it stock market, be it any other market that you see, right? The same is happening with crypto market because the Fed has increased the rate, the liquidity is drying up. You're seeing same thing with startup valuations, startup funding, all across the market, right? Crypto is an asset class in the making. It's new. It's defining the rules of the new internet. So the party has just begun, right? And
it's a very dangerous party. I mean, it's a party with potentially no rules, a party where the cops are keeping a very close eye and they could come barging in with sirens and everybody in the party could end up in trouble.
I think that's a very wrong representation of what crypto industry is. And I wouldn't be sitting here if that was the party I was part of. The party that I'm part of is building the new internet. In 90s, when the internet was just starting, I think there were a lot of skeptics who were saying the same thing about the internet, that it is used for all the wrong reasons. Now we have seen that crypto has moved away from Silk Road. It has now come to the main street, and tomorrow it would be part of the Wall Street as well.
What's your view on cryptocurrencies? Like, do they make sense to you, or is this a party which makes absolutely no sense to you?
Well, I would hate to say that it doesn't make sense. I believe don't be a skeptic of something you're not an expert at.
No, don't be diplomatic. This just sounds like you trying to weave a very diplomatic answer. Tell me what you think.
Well, I've always debated between gold and crypto, for example. I have been more favorable to gold, and I've been, adding gold in my portfolio. I'm probably like 15-20% old school gold right now. The problem.
How much crypto are you?
0. Yeah, I have never ever transacted, never bought a single crypto.
So it doesn't make sense to you then? Yeah, Ashish Singhal, I realize that he's feeling pressure. They just walk out together. I have to go back. I might meet him in the evening. Now, how do I keep it sane and diplomatic? But tell me.
No, see, the thing with crypto is I get why we need something like the crypto. I think the Federal Reserve in America, whatever, the 11 trillion they've printed in the last 18 months, it's more money than they've ever printed and backed by nothing essentially, right? I think they've been obnoxious in how cavalier they've been with their money printing. If you were to put in so much excessive supply of a certain commodity, it is bound to devalue. But it's a mystery why the dollar is strengthening in the last quarter. It's strengthening even this month. For those reasons, I think an asset class outside of that domain makes sense to me. Why that asset class has to be crypto, Bitcoin, Ethereum, that I don't get. I get the finite nature of Bitcoin and these crypto coins, but I do not see why for that use case this is the answer. I'm not able to draw that bridge.
Can I answer that?
Yeah.
So I think what we are missing here is we are looking at crypto as a currency, and I totally resonate with your view on that. But think of this, right? Say I go to a bank, or say you go to a bank, or say Mr. Ratan Tata goes to a bank. Although the rules of the bank are very simple, who can get the loan, who cannot get the loan, but we would be treated very differently based on who we are. Because a bank manager would want a favor from Mr. Ratan Tata and obviously not from me. So he would treat him very differently. What crypto started as a currency, but what it ended up solving is creating a platform which is much more open and much more representative of who we are. The rules of the land apply equally to all of us. So, say an Aave, which is a decentralized platform built on giving loans, is much more popular with the SMBs and the entire set of people in India, because the rules of the land would apply equally to everyone. And that's where crypto has moved. Crypto is not just a currency. It makes sense for a currency for few countries, but especially not for India. And CBDCs are probably the right solution. But if you look at the overall evolvement of crypto and solving the decentralized nature, creating an equal society for all, I think that's where the most of the use case are building. And that's why crypto has value.
The one other question is about how public markets view some of these startups, and what we've seen over there. Ritesh, I'm curious to know where you stand on this. After much hyped listings, like we had in the case of your friend Vijay Shekhar Sharma, who's been together with us on multiple shows, and that was a much storied startup story. And then you meet the reality of the markets, and not just in the case of Paytm, but other startups as well, taking a big hit. Are you planning to list, or have you seen others burn their finger and say, "Na baba, tune dance kiya? I saw the music got turned off. It's better that I stay away"? And why do you think markets are being so brutal?
So I think first off, I think if you look at this new opportunity that is coming in, and I'll just take extension of what we are hearing from all our other colleagues. I think there are a few areas where you can say that whether the music is under pause or whether it's a comma, whether it's stopped.
So tell me, how are you reading the music?
Yeah, but before I go there, I think there are a few areas where we can all agree that the party has just started, right? Like we can all agree that digital is a one-sided road, that digital will be predominant as a part of global change, but definitely in India. We can all agree that technology companies are important to make solutions for consumers, small businesses, and so on. And the third, we all bring services which are needed, like which people care about. We can all discuss what's the right price for it, what's the right valuation, how should it be valued, and so on. Given that, I think here are three takeaways of how I'm reading the news. The first bit is clearly globally and in India as well, technology's valuations in the public markets have not done extremely well. And my view there is companies among these which will deliver great earnings, which will deliver path towards profitability, forecast and deliver outcomes, will actually be companies which will create a lot of value for the shareholders. There will be some companies which will not be able to get there. My hope here at Oyo is, of course, our update for our IPO is twofold. The first is, of course, we're continuing to coordinate with the regulator for a potential offering. Our perspective is this is the time where a company's performance is changing quite dramatically as travel is opening up. So I would like to make sure that we have enough amount of performance as we go to the market.
But Indian investors sometimes, if it ends up like Paytm, tend to feel cheated, right? That the private equity guys, the venture guys got a good exit, they got a good multiple, and they ended up holding the baby.
So I think, look, first off, it's hard for me to talk about a specific issue, but what I can share is that India is in a very nascent stage for technology IPOs. I think, if you take it with the perspective of 5 years from now, I can assure you that there will be some IPOs that would create disproportionate amount of value, and today there are already some of them. For example, think about IndiaMart, look at InfoEdge, who have also, by the way, gone through their own sets of, volatility. But at the end, companies which deliver stable, high-quality earnings, they will create a lot of value, and there will be some companies which will probably not be able to get it.
Valued in Oyo IPO. Don't worry, just pretend he's not there. Just pretend he's not there. No, I'll tell you why. Because on the one side, there is a bounce back story just at this moment. On the other side, you've got concerns about overhyped valuations, unclear profitability on a consistent, sustained basis, and you've got the track record of what happened with Vijay and with Paytm. So, what would your advice be?
Well,
Pretend he's not there.
Well, as I would say for Vijay and Paytm, I think he's one of the most incredibly talented, smart human beings I've ever met. And what he has built definitely has value. I don't think we should discount the company because of the price action of the recent past. For Ritesh, we spent some time yesterday and he was explaining what he plans to do, what he intends to do with the company. Again, I think there, with travel opening up like it is today, I think they'll have like sunrise years for maybe like 5 years or 6 years, because people are really frustrated of having been in one place for too long. So I think it's a great opportunity, and everything he explained, I think I'm optimistic about it.
But it's also about pricing, and it's also about, Deepak, not overselling the story. I think that becomes critical. If you move with a realistic vision, which leaves some money on the table, which leaves investors with the opportunity of making money, as opposed to trying to match past heightened valuations just because you want to give your initial investors an exit, that then means that you're telling the real story rather than hyping the story just because you want it to be true.
See, Rahul, successful business models are not based on valuations. Valuations are consequence of successful business valuations. And valuation by itself is a reflection of the market, and market is both exhilarating and brutal. And frankly, none of us, with all sense of humility, and I would sure you would include yourself in that, has any clue as to how the market determines a value. So I think what the four of them doing here is right. They're focusing on their business. There will be a time when they might get a valuation which is beyond what they expect. There will be a time when that valuation gets a hit. But that is beyond any of their controls. Because if anybody had that true success formula, I don't think they belong to any of us on this planet. That person would be at a different level. So my point is that discussing valuations, especially when you're discussing successful businesses, are two different elements of it. The element here is to discuss the creation of a successful business model, which is what I think are the stories of New India which are coming out. We've got 4 stars here which have shown you how they've created it. They created it from scratch. They showed you what the opportunity promise of India is. They showed you what the transformational change of what is happening in India. And that is what is reflecting the success of their businesses. Valuations will come. I don't think we should be overtly so focused about them yet.
This brings me to the point about the need to be calibrated. You said now bottom lines matter more. Earlier we were chasing top lines. And a lot of people would say that, for a while, did a lot of these startup companies in India and internationally just have the wrong idea? Let's say what's happened to Peloton, for example, in the United States and elsewhere, just shooting up, coming down and that. And then you're saying, okay, don't hold it against just a particular company which has taken a hit. But some of those stories, because they are so much in the public domain, also set the perception of how the common man feels about it. Because while the investors and the entrepreneurs may have made their billions, it's the retail investor who ends up having to take a hit.
No, you are absolutely right. I don't think any of us disagree with that. And as Mr. Bagla was saying, I think people go in extremes, right? Like last year was nothing can go wrong. Right now, nothing can go right. And all of us cannot do anything about it, right? Like last year we were building our businesses and people thought this, like the right value of the business is something, and today people think it's something else.
It's like cricket. The cricket obsessed nation is the same thing. If he's Kohli, then Kohli is the best and he's better than Tendulkar. A few things go wrong and then kuch khelna nahi aata, bigaad diya isko.
Exactly.
So it's like that.
So instead of spending time in figuring out what is this like right valuation, wrong valuation, I think the thing to do is to build the right business, right? And I believe because of the new market environment, everyone is forced to do it. As I was saying, I think it's the right thing to happen for the ecosystem. If it had happened a couple of years later, it would be much more painful than it is today.
But the difference between all of what we're seeing play out, say, with a Meesho or with Ritesh and Oyo, is that these are businesses in the real world, right? So you can evaluate their performance on a certain set of metrics. The concern that people would have, like, so all the professors that I was speaking to said, this makes no sense because this is like the tulip mania, right? At the end, there'll just be tulips and there'll be no value because they're not tethered to anything in the real world. And there are concerns about whether once, bitcoins and other cryptocurrencies start to fall, is there anything to hold them up? Because Meesho can take a hit, can reset itself with lower valuation possibly, but a very realistic reset which survives. The question is, where is the bottom?
So I don't have the answer to that. Where is the bottom? Nobody knows, and that's the same for every stock as well, right? If you talk about crypto,
But we saw what happened, for example, with Luna, right? A lot of people very spooked by the fact that when things started going wrong, there was no bottom. It was like the emperor had no clothes.
So absolutely, these are new technologies, and this is bound to happen. You have seen startup fail as well. You talked about Peloton. This has happened there as well. So should we stop companies going public? Should we stop founding companies itself? No, the innovation has to happen, right? It was algorithmic stablecoin. First time somebody was trying, and it failed. Right, we do know that a lot of retail investors got hurt in the process. Same is the case with Peloton or the other companies that they have invested in. But the innovation has to continue. All of us has to push this forward. This is the new internet in the making, and I am very optimistic about it. Maybe some people may not be, but the idea is that the companies of the 1990s, if you go back and look at those, many of them have gone through the similar phases as well. Google, YouTube, Facebook has come out even stronger and now dominating the world. You would see similar thing happen in crypto space as well. A lot of Web3 companies would become dominant. You're seeing it on the Davos street itself.
They have the best parties.
They have the
best parties. I mean, you're talking about parties ending, the blockchain crypto parties are by far the best parties.
And parties are just continuing. They are just building.
Investors are worried about. That is there too much partying happening, and is there enough stuff happening in the real world?
If the party doesn't happen, then also people have concern. If the party happens, then people have concern. We don't know what to do. What we know
what to do is to build product.
Okay.
And if we continue to do that,
the crypto ecosystem will come out strong.
So as I come to the last part of this conversation, here are people who have built businesses. They've seen the good, they've seen the bad, and in Ritesh's case in particular, they've seen a bit of the ugly as well. We're seeing across India this urge for youngsters to do what you did, be the next Ritesh, start a business. On the back of everything that you've seen and lived through over the last couple of years, especially through the pandemic, what's your word of advice to people who are seeing this party now, seeming to be in trouble, wanting to be in that party but not certain of how to get in, and they've got some parents saying, you're seeing the others in trouble, mat karo naukri kar lo TCS Infosys mein.
So Rahul, I think it's a great segue because this is something that I'm like. This is what my parents also told me. So it's a great start for an answer. Look, I think first off, last time when we met, I told you the same thing. The best companies are built during the tough times. So I feel that, and our company was built during the tough times itself, because technology companies are fundamentally deflationary forces, right? Because in e-commerce, you take away the requirement for warehouses. In Oyo's case, you don't need shops anymore to sell travel. You can just sell it on a mobile phone. Because we are deflationary forces, companies that get built now will get built without the fluff. They'll get built really in a skinny, bootstrapped manner, which will create disproportionate value in the future. So I feel I really encourage entrepreneurs to pursue entrepreneurship if this is the year. And if parents are listening, I started my company from a small town in Odisha. Parents wanted me to work at one of the IT companies, I'll not name. And then, I've gone through tough times. And hence, if your children, brothers, sister, relatives are considering to start up and you're seeing this news, my only advice to you will be, having seen through 2 crazy years, is perseverance. We've all gone through significantly challenging times, and perseverance has allowed us to build character and significant value in the long term. And last but not the least, if you're from a small town, beyond travel, aapka time aa gaya. Thank you.
You think travel, chhod do, meri party, you find some other sector for yourself with it. Your word of advice.
No, I don't know if I'm in the position of giving advice.
To yourself also.
Yeah, so I think the thing that keeps me grounded and keeps me excited and keeps me inspired is the opportunity that we have ahead. And by the way, that opportunity was the same opportunity we had like a year ago, 2 years ago, and 3 years ago. That doesn't change. And to me, that should be a reason why someone jumps into it rather than what the valuation is. Right? Like otherwise, so then you are tourists. We started this company back in 2015, 2016. Like that was, if you look at the startup ecosystem, that was the time when things were shaking. And we did not start then because like, hey, it is hard to do this. We said, this is a life's mission. we believe in this mission. We really want to get small businesses online because we come from middle class family. We have bought from them all our lives. If they don't become part of the digital economy, who will, right? And that keeps me excited even today. Market goes down, market goes up, that doesn't change, right? The e-commerce penetration in India is only 5 to 7%. That number in the West and in the East, like China, is 35% plus. Like entire growth that is going to come in e-commerce in India is ahead of us. And that's what should excite you. Now, what is the right time? It is right now, cost of capital is high, so it's tougher to build it. That's what build character. As Ritesh was saying, best companies are built during this time, and we have to challenge ourselves that we want to be one of those best. It is hard, but we will do everything we can. And we will stay inspired by the mission that we have, and the opportunity is only getting bigger as we move.
To see your passion, Deepak Bagla, your word of advice.
It's so immensely gratifying seeing the makers of New India. These are the stories, what New India is coming up on. Just be at it. It's going to happen.
Good. Invest India continuing to wave the tricolor. Ashish, your word of advice.
I think I can't, I resonate.
Crypto, that can't be your word of advice.
Actually invest a bit in crypto, learn about this market and see where the tech is
Out,
heading.
as you go out, you can try and first convince Nikhil to invest some part of his.
I'll try to do that, but my advice would nothing different what people have said here. Keep on building. I think we started in 2017, crypto market crashed just 4 months after. Kept on building. For the last 3 years, nobody knew us, but in 2020, everyone knew us. Right? So it gives you disproportionate returns by just focusing on your users, solving their problems, and all the funding valuations will happen. Don't worry about it. Things will keep on, heading the right way as long as you solve for your users. Right. So that's my
Nikhil, finally, your word of advice.
So I think we're in a world which is changing so quickly. I would not be surprised if growth becomes a bad thing in the next generation.
Right.
Like, I think the cost today is being equated in the form of money, but tomorrow if you were to look at the climate as the cost and how much carbon we are putting out there, I was hearing some brilliant speaker here actually last evening, and the ECB chair or whatever, he was saying in your kids' generation or your kids' generation, growth for the world will probably be a bad thing. There's this incredible concept called donut economics, which tells you the balance of how much you need to grow as a company and how much you need to be apt with the ecosystem that you live in to kind of survive beyond that 10-20 years which most companies do survive. So I think the advice is be receptive to how the world is changing and be willing to change, and probably not hold on to notions of what we've kind of like grown up with and what we've inculcated through our lives, and be open to everything new that comes our way.
Fantastic. This has been a really enjoyable conversation. At least I enjoyed it. I hope you did too. And they've displayed amazing ambition, audacity through this conversation, passion and confidence about what lies in the future. As Deepak Bagla says, in their success lies the success of the India story. So we wish you all the very best, and thank you for taking our time and joining us here at the India Today studios at the World Economic Forum. I wish you all the best. Thank you. Thank you. You took some